بسم الله الرحمن الرحيم، والصلاة والسلام على أشرف المرسلين سيدنا محمد وعلى آله وصحابته أجمعين. Today we are going to discuss chapter 2 in our course under the title The Financial Environment. By the end of this chapter, the students will be able to understand: number one, what is the financial environment, the main components of financial environment, the concept of financial markets, the concept of financial institutions, the main function of financial markets, the main function of financial institutions, types of financial markets, and the types of financial institutions. First of all, what is the financial management and financial environment? The firm, when they would like to get their fund, most likely they get their fund from external sources. And we have different three ways for obtaining the fund from external sources. Number one, through a financial institution. Number two, through financial markets. Number three, by issuing shares and securities through what we call private placement. When we are going to say share and bonds for specific groups of people or individuals. Financial institutions are financial intermediaries that channel, transfer a fund from savings derived from individual, business, and the government into loans or investment. Therefore, if you give a look for any financial environment, you will find we have two basic partners: the key suppliers, who having surplus of funds, and demanders of funds, and those could be individual, could be business, could be governments. In general, individuals are net suppliers of funds, while business and governments are net demanders of funds. On the other hand, financial markets are forms in which suppliers of funds and demanders of funds can transact business directly. Such a transaction in short-term marketable securities will take place in the money market, while transactions in long-term securities will take place in capital market. Most firms there are using a financial market through what we call public offering of securities for raising their need of fund, where they could say either bond or stocks to the general public and foreigners. The second mechanism for transferring the fund, this is what we call indirect finance, where the surplus of fund can be indirectly transferred from those who have a surplus fund to those who are facing shortage of fund through the financial intermediaries, such as commercial banks, investment banks, insurance company, mutual funds, and so on. If we would like to start by the first dimension of the financial environment, which is the financial market, we could classify the financial markets into different categories. The first category is primary market versus secondary market. Second one, money markets versus capital market. Third one, foreign exchange market. The fourth one, spot market versus futures market. Broker markets versus dealer market. And finally, international capital markets. Let us start by the first category, price markets versus secondary market. الأسواق الأولية مقابل الأسواق الثانوية. The primary market, those are the market where we are using it for issuing a security for the first time. In primary markets, in which the user of funds, such as corporation, government, raise funds by initially issuing the financial instruments, issuing it for the first time. So we could say the primary markets are the markets where new securities issues sold to initial buyer. Almost we are using investment bank who underwrite the offer and provide assistance in issuing such a type of stocks or bonds for the first time. After the stock and bonds has been already issued, any further trade on such a type of stock or bond will be traded in secondary market. The secondary market are those markets where financial instruments are traded among investors. Example for such a type of market, New York Stock Exchange, NYSE, or NASDAQ. On the other hand, we could say that the secondary market is a market where securities previously issued are bought and sold. This is the first category of classification between primary market and secondary market. The second classification is to classify market into money market أسواق النقد أو الأسواق الفورية أسواق النقد versus a capital market أسواق رأس المال. And the money market, those are the market where we trade debt security with the maturity of 1 year or less. If the security has a maturity less than 1 year, it will be traded on money market. هي تختص بالتعامل على الأوراق ذات الأجال أقل من عام أو أقل من سنة. أقل من سنة, it will be traded in money market. Therefore, most money markets transactions أغلب صفقات السوق النقد are made in marketable securities which are short-term instruments such as US Treasury Bill, أذون خزانة أمريكية issued by the federal government, commercial papers أوراق التجارية, and negotiable certificate of deposit issued by financial institutions شهادات الإيداع قابلة للتفاوض by the financial institution. In most of cases, such a type of securities traded in this market are risky in a comparison to others. But most of securities traded in money market can be considered the least risky investment available. On the other hand, على الجانب الآخر, we found that most of the international equivalent of the domestic money market can be considered as an euro currency market. What is an euro currency market? It's a market for short-term bank deposits denominated in the US dollars or other marketable currency. Most of the euro currency market has grown rapidly because it's unregulated. It's unregulated in a way that could meet the needs of international borrowers and lenders. On the other hand of the money market, we have the capital market. What is the capital market? The capital market is the market that enable suppliers and demanders of long-term fund to make a transaction. يبقى in this type of market, all types of securities traded in this market are long-term. يعني it has a maturity more than 1 year, such as common stocks, such as preferred stocks, such as bonds. Especially long-term bonds such as T-bonds, the bonds issued by the US Treasury, and in most of cases its maturity is more than 10 or 30 years. Of course, when we are speaking about money market and the capital market, we must also be aware of the relationship between bond market